Good afternoon, good morning, folks. Welcome to the future session with myself, Giles Cochran. Good morning, Konstantinos. Good morning, Nadjam. Adair, good to see you, folks. Right, just had a weaker CPI print, so we'll take a look at that in a minute. Hope everybody's doing well. Can see my screen and hear my voice a-okay. Good morning, Brennan. That's great. Okay, gonna give folks 30 seconds or so to sign on in, then we'll get stuck into the session. Hey, Konstantinos. Morning, Ryan, good to see you. Yeah. It's afternoon for us here in the UK, right? Good. Let's get stuck in, folks. Let's get going. So, a few things to look at. We'll look at the CPI in a minute. But first of all, we had the German ZEW data come in earlier from the Eurozone. That was as expected. There's an expansionary policy in Germany. Germany is the powerhouse of Europe. So, although that's good news, we didn't particularly see the euro lifted on that because it wasn't surprising. German sentiment is obviously positive with the fiscal expansion coming out of Germany. So that was kind of as expected. It's not going to hurt the euro. The main event today was the CPI
just
print
be aware, it's
out of
nothing
the
too
US.
interesting, but the president is on Truth Social at the moment, starting tweeting. Again, nothing particularly interesting. The latest update, just flagging US President Trump is currently posting to Truth Social.
Trump's posting to Truth Social, so he's up and about. We'll keep an eye on that. Keep the squawk on. So the CPI data, we got CAD and US data. No big surprises out of Canada. Inflation may be slightly firmer, but not a big surprise. The CPI print was lower than markets were expecting. If you look at that core region, and that core element is important. You can see that's just coming in slightly weaker, 0.2%, 2.9%. That's going to be a little bit better than markets were expecting. The headline, you can see coming at 0.3%, and the headline 2.7%, slightly firmer. So quite mixed, but it's not, the horror story that inflation's sort of surging massively out of control or anything like that. So that's why we saw equity markets gauge higher on that. And if we look at the dollar, you can see that the dollar, where is it? It's just sort of weakening a little bit on that print. Okay, so mainly because I think market expectations going into the CPI print was going to be 0.3% for the core, it was going to be hotter. And if you just take a look at the data now, core inflation, just, it's still moving in the right direction, the core. And you can see the headline still moving lower in the right direction. Core, not pushing above those February 2025 highs. And it's all sort of still lower. So even at a cursory glance, you look at that and you think, okay, that's roughly moving in the right direction. That does give us a euro dollar buy bias. So in terms of currency opportunities, this is a standard deviation at the 605 region. So any drop down to that big trend line on the daily chart, also the pivot point around here, you wouldn't be surprised if you do move down here on any dollar strength. Wouldn't be surprised to find dip buyers there. Target will be, up that 1.17 region. Wouldn't be unreasonable. There is a sort of standard deviation from the implied volatility level up there. So any dips lower, you'd expect buyers in the euro dollar. Similarly with precious metals, still maintaining silver longs and looking to add into this position, but now looking to add into it from any dips back down to that 37.50. Looking at it on the daily chart, you can see that we've had this strong move higher. We've got a little bit of a pullback. So just waiting to see if there's a slight pullback here. That might be a beginning of a head and shoulders pattern forming here. So just keep an eye on this here. That could be an intraday opportunity here, just seeing that. So we've had a drop, left shoulder, head, right shoulder. So if we see a breakout on volume of that 38.35 region, that would be suitable for going long here. Okay, hey Nadjam. Nice little head and shoulders and silver just to keep an eye on. And again, looking for any opportunities there. Similarly with Bitcoin. So a big move higher in Bitcoin as well. And it's a very similar kind of setup. So,
Just making you aware, we are expecting Fed's Bowman in this time at 1:15. Attention has been on Bowman recently, given her dovish tilt, having said that she would be open to a July rate cut if inflation pressures stay contained. Of course, we did get the latest CPI report today. However, it's not looking likely we will get remarks related to monetary policy, given Bowman is set to speak on unleashing a financially inclusive future.
Yeah, nice Nadjam. Yeah, it is a nice little area, this. Any little break of that area Use the on-balance volume as a proxy and looking for a move up highs. Yeah, nice Najam. That makes sense. Now looking at earnings season, we're there. We've had some earnings out for the open. Not massively big names, but we just got to start be aware. Big names coming up. ASML, Netflix coming later in the week. That can really move markets. So keep your eye on earnings. Remember, we're in earnings seasons. In terms of like speakers, we've got Barr speaking at 5:45. We've got Lutnick, Commerce Secretary out of the US, speaking at 3. Bowman at 2:15. And remember, Fed's Bowman said that they were up for a July interest rate cut. Yeah, okay, Najam. Yeah, that makes sense. Not too much importance. So Netflix can bump the Nasdaq around. Let's check anything else on the calendar. That's really it for the calendar. Let's look ahead for tomorrow. I think we've got some data out of the UK, haven't we? UK CPI. So what you're looking for there is any surprise print that comes in below market's minimum expectations. That should give us an opportunity.
Just an agricultural update from China. There's been a meeting on ensuring supply and stabilizing prices of potash fertilizers, according to state-backed Securities Times.
So if the headline core CPI comes in below 3.3, if services comes in below 4.4, and if the headline comes in below 3.1, if we miss minimum expectations and the priors are unchanged or revised lower, look for more pound weakness. Expectations for bank cuts in the Bank of England are increasing. Expectations for interest rate cuts are increasing now for the Bank of England, and we've seen the pound starting to weaken recently. If you look at the pound at an index level, you would have noticed that, you know, you can see some of that weakness coming in. You know, the pound has sort of seemed to defy gravity, but if you look here, you can see it's beginning to push lower. We've had this sort of a test up at that 120, test that 120, and now a rejection. So watch out for the pound. Any excuse to sell the pound will be welcomed. So definitely look at that UK CPI tomorrow for any currency trading. Najam's just shared this very helpful weighting for the Dow. You can see the Dow weighting is here in green, right? Which is highlighting that the earnings seasons out this week are more influential for the Dow Jones than the S&P 500 and the Nasdaq. Okay. Now, I don't know why they haven't got the Netflix weighting there. Let me just check out what the Netflix weighting is for the Nasdaq. Netflix has got 1.18% weighting in the Nasdaq. So it's not a huge move, but you can see the Dow clearly the most influenced index by these earnings that are being released for this week. Thank you very much, Najam. Good help. Now, as we're looking to the S&P 500, just remember, we've got Bowman speaking in a few minutes. If you look at the price, we're looking at opening above the previous day's range and the previous day's value area high for 1, 2, 3, 4 days. So we're looking at opening above that value area high and prices holding above the R1. We've had that slightly weaker than expected CPI data. We've moved up to the value area high, push up, pull back, dip buyers, sellers trapped. We point to control holding. As long as we stay above that R1, it's not unreasonable to start looking for a move up to that R2 region. Okay, that's absolutely fine. That wouldn't be unreasonable. Looking at the S&P 500, you can see there's sellers here, right, that we're trying to trap with prices pushing up. If you look at the hourly chart, we've had price pullback and support off that daily VWAP. So underneath this area, okay, then you think, okay, buyers will potentially give up and sellers will keep going. Otherwise, this is a decent support area, and you can see on the daily, right, this is a value area high. So we've broken underneath that area, and then these buyers on that week's CPI print have trapped these sellers and trap those sellers. So I've taken some longs. Once those buyers here clearly trapped those sellers, entered in another position, took one position off at the standard deviation, and then when these buyers trapped those sellers, entered another position because you can see that those sellers were trapped there. Okay, so sellers getting trapped by buyers above the developed value area.
Just coming up again, as a reminder, we are Looking out for a text release from Fed's Bowman. No Q&A is expected.
So just looking for this to move higher. I think Bowman, if anything, can be pleased about that CPI release. And you can see the cumulative delta is positive on the 15-minute chart. You can see buyers have trapped sellers before the open. So that's why I've been happy to buy in at the open and then looking for a move up, potentially a retest. Can we get up to that R2 pivot point? Now, looking at the markets generally, sentiment is positive. US equity futures moving higher, volatility pushing lower. Nice hammer reversal. That's what a decent hammer reversal looks like here. So that Euro Stoxx hammer reversal. Long tail, rejection to space. That's nice. Expect that to give upside. Just having a look here.
And Fed Bowman does not comment on monetary policy or the economy in her opening remarks. So no comment there from Bowman on the economy or monetary policy.
Okay. Yeah, sure. Let me check that out. Let's just look at the data. Just go through quickly. Bond markets gently bid, nothing really massively strong there. Gold just pulling back. We've got those tariffs deadlines at 1st of August. So that's going to be gripping markets' attention for now. Copper pulling back, but looking like trying to form a nice sort of flag pattern. That's quite a decent flag pattern there. I like that sort of channel. So a break above that channel could look for potential copper longs. The dollar finding some strength again at the moment. Yeah, that's euro dollar. Sentiment broadly positive. Let's have a look at that AI stuff. Let's just get the US. Okay. Yes, dollar weakness out of the softer CPI is fine. Equity rally, yes. You expect that to lift the S&P 500 and NASDAQ as it has. Commodities, a weaker US dollar may support commodities like gold and oil. Though weaker manufacturing data could temper demand, it seems likely that commodities will see a net positive impact. So you'd expect, yes, dollar weakness, yes, equity rally. Commodities got a few different drivers at the moment, so they don't respond as an exact correlation. Weak dollar, strong commodities, strong dollar, weak dollar, strong commodities, strong dollar, weak commodities. It won't necessarily be as straightforward as that. But otherwise than that, yeah, it's not much wrong with that. That's broadly there. The only weakness with that outlook is, you see, if the core was like 2.7 and if the headline was 2.3, then we could expect more of an equity rally and more dollar weakness. Whereas as it stands, yeah, it's on the low side, but does it necessarily change the bigger picture? Not necessarily, but it's not going to hurt. And you can see here, is that another bunch of sellers getting trapped here? There we go. So another bunch of sellers getting trapped there on the 15-minute chart, and that just keeps that sort of buy bias alive. Now, which makes a lot of sense. I took a long on that just because of the outlook. Weaker inflation data should support equity markets. It means the Fed have got more liberty to cut interest rates. That should be more expansionary for businesses and should allow more disposable income for consumers down the line. So you expect that to lift equity markets. Yeah, exactly, Nadjan. And you've got the 15 trap, and it's straightforward. I looked at the weekly as well. You see we're above the weekly value area high on the weekly chart. You can see on the daily, we're trying to push up and make fresh highs on the daily. And you can also see that delta is positive since the Globex open. The price is captured here. And obviously if we start going underneath this level, then that's going to change the outlook. But otherwise, I'm happy to hold longs into the open and see where we go. If you're not long at the open, buying in on any dips down to this area is fine. 63.2, 63.30. Any dips lower, it's not unreasonable to expect buyers there. Have a quick look at the NASDAQ, see what that's like. And again, NASDAQ trying to hold above that area. So it looks like that wants to break out as well. So just looking at the chart, you can see the way that price moved up, pullback, breakout. So there's even a kind of flag pattern there. It's not the best one, but it's flag channel pattern, something like that. See, as we pushed up out of that area, and that's holding for now. Bowman's speech has been released and there's nothing on monetary policy there. Just going to see what else is going on. No, the next thing then is the open, really. And Trump tweeting on the Truth Social. I'd use the micro, makes sense.
And following the earlier US CPI report, just seeing some estimates now for core PCE come through. Pantheon Economics, they provisionally estimate that today's CPI data is consistent with a 0.35% increase in the core PCE deflator.
So there's left shoulder, right. That's it. Ryan, that's it. That's the micro silver account, Ryan. So just gonna have a look at the risk as well. So basically, one contract on the micros, if you've got like a 20% move, that's basically 40 ticks. So that would be $200. So if you had a stop from 70 to like 50, so from entering here, set like 70, stop at 50, that would be $200. Just so you know. Keep an eye on silver. That's not a bad kind of area to look at. We're trying to push higher now. Coming up to the open. Which instrument, Nadja? Remind me. Yeah. Thank you, Nadja. I'd actually forgotten that bullish piercing line. So you see this bullish.
Just seeing a response here from the White House on the FT report regarding Trump's comments to Zelensky. Says the FT report misinterpreted Trump's comments. It says Trump was merely asking a question.
Right. So look at this, folks, when you get a bullish piercing line. So it's two candlestick pattern. You've got the open is below the prior. So you see the open there is below the prior close. And then the close is above the 50% mark of the prior candle. So the 50% mark is here, right? And the close is above the 50%. That's bullish. That's a reversal candle. So you can see you had it in the Dow, had it in NASDAQ. No, you haven't got it in the NASDAQ, sorry. But you got it in the S&P 500. And you got it in the Dow as well. Let's just see, is that technically there? I don't know if did it hit the 50%? So not quite, just short in the Dow, but it got it in the ES. NASDAQ is in the NASDAQ. Folks, so here we are coming into the open. So I'm going to see if I can get up to the 6347 at the open and maybe see if I can take profit up there. That might be, and then see. Nadja, fantastic, well done, very well done. Good way of trading that open as well. Excellent. Got 2 minutes. Here we go. So we're coming to this area. There's quite a lot of sellers there. It'd be interesting to see if those sellers can get trapped at the open. If those sellers do get trapped at the open, then expect a bounce off the standard deviation. So if buyers are able to trap sellers there, and look for a bounce off that standard deviation. If not, then look for a bounce back off that six. No, it wasn't really. What was a reason to trade was these buyers trapping those sellers from a developed value area and a weak CPI print. So I'm not saying that couldn't be a contributory factor. It's not a harm, but it's a poorly defined hammer because the body is not within the close of the previous candle. But it is rejecting the VWAP and it is a developed value area. But it's more the fact that buyers have trapped these sellers and we're in an uptrend. Just entered a quick short in the NASDAQ, just as that's dropping down. You can see here, if I can just move that to break even as we just drop down through that level. See if I can just trail that now. Try and trail it on the one. All right, get out on that on break even. But now let's look at the mini. Let's just take another look at this now. So we got sellers trying to trap these buyers up here. On the 15, a lot of volume coming in, trapping all those buyers. So on the 15, we're getting these buyers trapped there. So if we get those buyers trapped in the 15, I'll be happy to go short on this.
And one to be just potentially wary of. According to the Slovakian PM in a statement, a representative is tasked to request a delay in the vote on a new sanctions package on Russia. Although do be aware, the PM of Slovakia says that delay in the Russian sanctions reflects the position of Slovakian political scene. So
those sellers have come in. Delta is now negative. Trying to bottom here, see how we go. A decent area to potentially look for shorts. Very large 15-minute opening candle now. All there.
Update out of France. The PM is to propose cutting at 2 public holidays, according to French press.
We're trying to move lower now. Potential breakdown through here would be good. We just get underneath those lows, potentially look at adding another short and then try and take profit up off these levels here would be the target. Let's see. So we're going down through that level. I want to see now if we can get down through here into here. Now on the hourly, that's sort of the decent support level here, back into that developed value area on the weekly. We're coming back down to the second standard deviation, another retest of it.
Just be aware, US President Trump talking trade with Indonesia. He says, great deal for everybody, just made with Indonesia. I dealt directly with their highly respected president. Details to follow. So sort of note there for Indonesia and APAC watchers, US President Trump just announcing a deal with Indonesia. Says it's a great deal for everybody, and he dealt directly with their president. Details to follow.
It's giving sentiment a little lift. Buyers trapping those sellers down there now. Tariff concerns still bubbling around.
We have just under 10 minutes now to the top of the hour. At the top of the hour, Commerce Secretary Lutnick will be appearing on CNBC.
Go 5 minutes to the close. Sort of trying to find support down here. That dollar strength is pushing silver lower. Let's see how the Dixie's doing. Continuing to push up. So that does say maybe some more downside in equities.
And folks, just worth pointing out, the headline's just noting the dollar's moves in recent trade. Again, as my colleague had suggested, it does appear to be yield driven, with yields just climbing along the Treasury curve, not completely out wide across the curve just yet, giving support to the dollar. In terms of the reasoning, many of the researchers following the CPI data noted that a lot of the internals do show some of the tariff effects, particularly good price rises. Seems to be getting a bit of attention in the research notes going around.
Yeah, this is it. Yeah, so people are reading that CPI, though the headline was weaker. They're looking into the detail, and economists are saying this is showing tariff concerns flowing through. That's what's driving it. That should keep the E-mini pressured. Yeah, thanks, Najam. You can see that strength. Can we crush out some of those buyers? That's what's needed, really. Okay, we're having a go at going lower now. Okay, so this is an attempt at a run lower. Okay, and I'm going to see if I can just get down to this 6315 and just try and take profit there. Enter another short in at the 6318 if we can get there. Trying to trap some more buyers here. We've got to break through that level. Coming up to a 15 close. Okay, that's good. I entered another short. And then just see if I can get a run down to the 6316. That's the plan. Okay, sellers coming in again. Another shove lower.
And US President Trump talking inflation. He says US consumer prices low, bring down Fed rate now.
If that doesn't call the S&P 500 to sell off, I don't know what will. That's in direct contradiction to what the market's thinking. So we've had an hour close. That's trapping all those buyers. We look like we want to move back down to this area here. Just seeing if we've got one more shove lower here. We're going for it. Is that the move? Going for the run. Nearly there. Right, that's it. Okay, so we hit target finally. All right, folks, let's call it a day there. It was a game of two halves, really. Up with the weak CPI, trying to go long and breaking out, and then down with the analysis of the CPI that it was seen as inflationary and evidence that tariffs were having an inflationary effect. So lost the first trade, won the second trade, and then prices just continued to drift lower. With the hourly close, as Ryan was pointing out, now underneath this 6300 region. So we just got to hit the 6300. Now, have we haven't quite closed underneath there, but nevertheless, we have closed underneath this region. So I would expect sellers at 6310, 6311. So I think it's not unreasonable to look for a move up to there and look for potential sellers around the 6312. See if we can get back down to the 6300, 6298. All right, folks, that is it for today. We'll be back tomorrow. Take care and speak soon. Thanks, everybody. Bye for now.